The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. This is 11th day of August. Can you believe it? August, for us here in the Boston area, summer's almost done. Got another 2-3 weeks, and that's it. Anyway. Thank you, Steve and John, for a great introduction. Starting at 8 o'clock right here at TFNN. We just go right through the day, ending with Tom O'Brien at 4 o'clock till 6. 4 o'clock, 3 o'clock till 5. That's Tom's new hour. And we have programming. I mean, this is educational. We hope that you benefit from it. We hope that you derive a tremendous amount both of pleasure and knowledge. So with that said, Dow's up 50 at 16,603. S&P is up 9, almost 10 at 1941. The composite index is up 33 at 4404. You've got gold down about $3 at 1307. Silver's up 2 cents at 19.96. You've got high-grade copper stuck in the 3.1 area. You've got crude oil stuck in the high 90s at 98.38. But bonds are down only 6/32 at 139.07. Just a fascinating market that we've got right now. Of course, we had that Friday reversal to the upside. Something that we were anticipating for my opening call subscribers. It's my daily newsletter that goes out. Actually started out this weekend. I started sending charts out, and in preparation for Monday, then I repeat the Monday ones as well as the new ones that I've updated. And you have my Traders Corner, and that's we have our positions very light at this particular point, both on the short side and the long side, where we do have that. And we're looking for this bounce to extend just a little bit longer, and then we'll see what happens. Very important phase, and I'm going to show you something that says that if such and such happens, then we can expect X. But if such and such happens, we can expect a different scenario. So we'll go through that in a moment. And even more importantly than that, you've got the dollar. Now, this is going to be very interesting because I discussed the dollar DXY having a potential DXY right there. DXY having a potential peak G rather than expecting that DY because of the way the MACD and the stochastic are acting and the way the 9-period moving average is acting, the way the price is held above the 9-period moving average and then extended in a big kind of Lamar type a U-turn that you get, or a V-shaped turn that you get in a corner on the racetrack. And that says that there was so much energy to the upside that you don't need to fulfill it by going to a D. Rather, you're going to consolidate here. Well, we don't know just yet because the MACD fast-moving average, that's the 9-period differential, is still acting well. And even more importantly, the stochastic has just dropped under 80% and is kind of flattening out there with a relative strength. So you've got some technical indicators suggesting that a close in the index below 81.30, especially let's call it 81.20, would be in fact some kind of a short-term top. And at the same time, you might, and I must emphasize the might part of it, you might see gold rally a little bit more, making U-shape pattern to try to get from the 1308 level it's at now, down 270, up into the 1328 to 1333 area, maybe even retesting the 1340 area. But the 120-minute chart says, no, probably 1313 is the maximum, 1315, and then you're going to come back, do some retesting, and a close in the next 2 days below 1305 would start to suggest that the 1304.51 200-period exponential moving average is going to be a magnet for prices to go just barely above and then just a little bit below as it becomes a line that gets hugged. And you would want to look at the EUR-USD. That is the euro, which had a nice session on Friday, and now it's having an inside day. It's trying to rally, but this is a very unusual market in that it isn't often that you get parallel moves in indexes or either sentiment index or stock index, equity indexes, or the commodities that don't go counter trend to one another. We've seen that gold and the dollar have just been stuck in a range, and then the dollar started to rally sharply, but gold didn't break down. And at the same time, you're looking now at the euro having a little bit of a rally, but in terms of what's happened to the dollar, the euro is actually held fairly well. Not great, but fairly well. So we've got that out of the way. Question then about Tesla, TSLA. Let's have a look at that. I'd say that I expected it to go higher. Yep, there it is. I said it would go higher. Why didn't I give this to my subscribers? It's in leg C in the daily, and that is really good action. Most importantly, in the 120-minute chart, nice candle, but it's really the weekly chart that says leg C, all-time high of 265, round number, is about to be challenged maybe this week. We'll see, because all it needs is to go to 265.01, and you start a leg D up in the weekly chart, and lo and behold, when that D comes in, that's where we've got to be quite careful. So now, I've got a couple of things to discuss here. I'll do it right now. For my subscribers in my opening call, I spent a lot of time on this particular chart right here. Why? Because it just gives me so much information. It's the Dow daily chart, and I notated with the Chapman wave methodology, and every higher peak and every lower trough I discuss in terms of the patterns that we look for in the CD introducing the Chapman wave methodology, only available at TFNN. That's what I look at in terms of what techniques are working. And right now, we've had the conclusion of the left side to the right side price time match, which I discussed as August the 7th, should test May 20th, 16,341 level. Well, we have not only gotten there, we've got there exactly on the day, August the 7th, and Friday we had that gap up. We started off the morning with a little bit of a gap up, and then it just exploded to the upside, closed almost at the highs. Very sharp day in the up day in the Dow, and now we've got a follow-through of a plus 60, and it's above the 9-period exponential moving average. And what I said is, I'm anticipating that this is going to be a bounce that can last 3 to 5 sessions. Within that context, what we've got to look for are where the resistance. Well, that's very unfortunate. Why? Because you've got this terribly ugly candle. Remember the 300-plus down day of this 31st of July. Dow opens at 60,005. The 60,869.63, which is the high, and then it plummets and closes way down at the low of 15,630. We've hardly ever seen a day that opens at the high and closes at the low with a massive down move like this. Occasionally we've seen to the upside, very seldom on the downside. So that bar doesn't give you any support or resistance levels other than the outside edges. So I have to go inside here, and I have to go to other levels, and 16,703 would be the target there. But what I say to subscribers, until the Dow starts to turn the 16,800s into a friend and can actually turn the 16,000 high 16,680 level, 16,720 into some kind of a base, this has to be considered just a bounce within the context of a changing trend. The tide is going down. Talking about the tide, it was fabulous yesterday. In fact, both days of the weekend out there in Rockport, Massachusetts. Really a fun place to be at. They've got that beautiful music center, the Louis Music Center, and just a lovely little beach. Got there at high tide, and we watched the tide go out all the time, and that was really good, because if it did the other way around, that beach would have been really crowded, because I don't think it could have held all the people there. And a lovely place, Rockport, really a fun venue for a destination place, because it really is a place that many people come to, and they just to buy things. I like to go to the beach, walk around, and a couple of things that are very nice. So let's just go on with this market, talking about tides. The tide, as far as I'm concerned, is going to low tide, and this is just one of those counter trend waves. Is it going to be a single leg A? I got a feeling it might be a B minus when it finally turns around, and it should turn around somewhere in the 16,680 to 16,740 area. We'll see. I'm not locked into that, and we won't have any positions based on that until I see some further evidence, because the VIX is in fact pulling back. It's down almost 2 points at 13.83. Now I'm going to go to our first caller. We've got Mark in Denver. Mark, how are you?
Good, Basil. How are you?
Good, thank you.
So, I got your Trader's Corner on the late side on Friday because I had other stuff going on.
Okay.
And I saw the Solar City recommendation.
Yes.
So by the time I got to it, it was almost near the close, and I decided to take a shot, thinking it might still have its potential to make the peak D. And I took a position in the low 70s, about 70.20, and I now have a stop right below the low of Friday, which is around 69.40ish, and it's actually bounced fairly nicely here. I was wondering what your thoughts are. Do you think it still has the potential to make that peak?
I did not have, folks, we went into this on Friday, and I put in a 2-point stop. Usually, actually, I put in a smaller stop, but it was leg C. It was acting really well. Solar City, SCTY, now trading, Mark's going to like this, at 73.28, up $3.14. Well, we got stopped out for a 2-point loss. So it's considering it was a $75 stock, 2 points is, it's really a small loss. I didn't want to take a loss at all. I didn't even expect to have a loss. I don't know what the news was. I meant to go through it over the weekend to find out what the story was, because it came out of the blue, because FSLR, which is First Solar Inc., didn't have that kind of a pullback, and it was actually the choice I had between Solar City and FSLR, and I chose Solar City just because it seemed to me on a fundamental level I had more information than I did on First Solar. Well, First Solar turns out to be the one that succeeded also in the 70 areas. Right now it's 70. So I think what you did was absolutely terrific, that you looked at it, you assessed that you didn't go into it to say, there must have been bad news or anything. You looked at the price and you said, this is a little unusual for this, and I'm going to take a chance and see if it can get to that leg D. That probably is a really good entrance, and I'll explain why. Because if SCTY, if in fact that was an aberration on Friday, that there was just some bad news that filtered through, I should have it somewhere. I
think the earnings had come out, and the earnings report wasn't all that bad. I think it seemed like it was positive, and it may have just been a sell the news type thing on a stock that was going up, and I don't know. It was kind of weird because the market did so well. It was but it opened up near. I think it opened up near the high.
Let's just go through this, because it opened at 76.11.
Right.
And then it went to 79.40, and I was not prepared to chase, thank goodness, at all. I wanted the pullback, and I thought 75 in a stock that's trading pre-market up between 2 and even 3 points at some stage. I thought that was a really good risk-reward. So we'll come back into it, because this is a very interesting stock, Solar City, because as Peaky in the Den says, can't sit down for dinner without being cold called by a solar company. Absolutely. We'll be back with market.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of the Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Basil Chapman, Tiger Technicians Hour, and we're up 72 points now in the Dow at 16,626, and the S&P is up 13 at 1944.5. And we're on with Mark in Denver. We're looking at Solar City and SCTY. It's up 2.85 at 72.99. So I see now Gunga in the Den was kind enough to send it out here for the second quarter. The solar energy company reported a loss of 96 cents a share, beating the Capital IQ consensus estimate of loss of minus 99 cents a share by 3 cents. Revenue grew 61.6% year over year, 61.33 million for the quarter, below analyst estimates of 63.24. That's still pretty darn good, I must say. So what I'd be looking at here is two things. There is the chance that this is an alternate count and it's an E instead of a C. That's the number one thing that I was concerned of, only because the stochastic was not that good, and the MACD looked as if it was going to cross positive, but in the end it didn't. It deflected lower. So this pop-up today is actually very important. How it closes is going to be important. But my concern was that we had made a peak D in the 120-minute chart on Friday, on Thursday, I think it was, and that the pop-up might have been E, but my thinking was that if it popped up, it should raise the base, not down to the 70.15 200-period moving average, but to the 9-period moving average, around about 72.40 at worst. But my thinking was that there should be some kind of a pullback, but it'll be very contained. Well, I was wrong. It pulled back further than I expected. Now it's giving back some of that overcompensation to the downside on Friday, but I'm a little concerned only in that if it doesn't close near the 73.40 area, today's high is 70, 425, but it must close closer to the 73.5 area, so that it shows it wants to try to retest the previous high of 76.06 back in July, and then the high of Friday at 79.40. But that entry point allows you a little bit of room to breathe and to just say, hey, let's give it a chance. But I would do this. If it goes to 72.50, down about 60 cents from here, to my eye, that would be not a very good sign chart-wise. And I'd say at that point, I would take a little bit off. You can keep your original stop that you had, but my thinking is that I wouldn't give it back those extra 2 points. I 60 cents from here to the downside on a day like this, it really shouldn't give it back. And if it does give it back, it's speaking more towards some kind of consolidation that's taking place rather than the strength that it had shown earlier. And maybe it showed strength because market was going into the earnings and people were expecting something much better. Right. So that's the only way I can think of it, because I was wondering, I had emails as well about it, wondering why it was acting so well when the market was acting poorly, and it was my error in not thinking, hey, that pop-up Friday must have been because of earnings. For some reason, I thought earnings had already come out. I was wrong. I should have been looking at that. So it was a miss on my part. Not a serious one, but a miss nevertheless, and I'm now looking at it and saying, okay, step aside. You aren't in the position. If you got in this morning at about the opening of 71.02, you'd have that cushion, but you didn't. So you, Mark, have done that exact thing. You got in on Friday. You've got a nice a reflex rally. I need to see it close strongly. I don't want to see it give back a chunk of the gains here, because that's just going to say, in fact, the original assessment that it was a disappointment says that, you know what, in the weekly chart, you've gone into leg C, probably making peak C. It might have to test the 68.21 9-period moving average, and I don't want to be trapped on the long side in this. I'd rather be able to take some gains. Now, here's another way of looking at it. Because there's a big question, I should say, I have a big question in the chart because the technicals are not that strong in the daily. Technicals in the weekly are very good. I'd be inclined to say take a little bit off on a trading stop and give it very little room here, so that at least you've got a cushion. Okay. And that cushion can allow you an extra day or two to just say, hey, you know what? If you have enough strength to make a new recovery high, that'll be wonderful. But I've already taken something off. I'm going to give you much less of a cushion than I had before because I've already taken something off. That's just kind of the way I would look at it. Yeah, and I was kind of thinking I was going to look at that, the big bar from Friday as kind of a place. It's got to, I would think it's got to test the low or the high of that day at some point in the near term, because it was such a big volume day, and it was depending on how it tests. And an important session in terms of its history, so because it was an earnings report. So I hope that helps you to a certain sense. Okay, thank you. Thank you very much for calling, and good eye and good entry. So Basil Chapman here, Target Technicians Hour. We'll be right back. Dow's up 66, S&P is up 12. I'm going to look for the weak stocks in the Dow, see what's happening when we get back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We're back, and we're looking at KMI, suggesting the 10 to look at. This is Kinder Morgan. I saw Kinder being interviewed this morning, and it sounded like there was, I don't usually, I have it in background, or I don't have the volume on at all, but it just sounded from the few words that I heard that there was a take-in. I don't know what you call that. It's the 3 companies, and they wanted to go under one umbrella, and there's a big spike to the upside. It's up 308 at 39.17 KMI, Kinder Morgan Inc., and Kinder Morgan had a high of, can you believe this, 42.49, looking to see if it's correct. 42.49, closed Friday in the 36s. Whew, that's quite something. So, yeah, there's nothing much I can say. What would I do with it if I was long? I'd probably say, you know what, I'm going to take a little bit off here just to reward myself for being patient, because it's a real, it's a stock that can go from the 31 area to the 39, 40, 41 area, and then come all the way back and retest. So I would be taking some profits just to reward myself with a pleasant surprise, but I'd keep the call. This guy is a genius. He's really, he's just run an outstanding company. I've watched this for years. I remember Kramer pounding the desk and saying, got to buy Kinder Morgan. I don't know if he's still in it, but he's always liked it, and his reasoning was very good. So, okay. Now I want you to talk a little bit about 2 things. One is about time frames. In the time frame that I'm looking at of the weekly chart, and this is what I sent to my subscribers, a very detailed report, but I'll discuss the important aspects here that I want to show just as a visual. You see this dashed red line here that goes well with all the other parallel lines? Well, that support came in at 16,333 in the Dow last week. Exactly. And then there was this inside track that I had drawn the sub-channel. And that sub-channel says, yeah, we might be able to rally a little further. It's harder and harder to rally because it's such a mixed market. But Dow 16,614 right now, 50 up 60. It could go if it didn't have some aspects to it. I was looking at different charts during the break, so I didn't get. Maybe I can do that now. Give me 1 second just to see what's in the Dow, what's weak. But I'm sure that Exxon's probably weak. There are a couple of stocks that are acting quite poorly. But most importantly, the 9-period moving average of 16,731, going into that area is going to be really critical. And the MACD and stochastic are not at all recognizing the weekly chart, this rally that we're seeing on a Monday, straight after the Friday, huge big rally. So that says to me that the tide definitely has changed. This has to be treated as a counter-trend rally. We remain short the Dow from way up higher, and we have a little bit of short elsewhere. But mostly what I'm looking at here is that we want to initiate some shorts. But there are long positions that we have a long position right now. It's not acting great. It's acting okay. But it should actually start to participate pretty well soon. Or else it's going to be a stock that's had a great move and now needs a timeout. But so far it says that it's doing okay. So when I'm looking at this particular market, everything strikes me as and saying on the monthly and weekly charts, and then on the daily, going to the 17,151 high, back on the 17th of July. Let me just put that in there. 17th of July. That overbought condition suggests that some kind of a pullback will unfold. When I go into the weekly charts and then the monthly of so many of the indices, it said any sharp pullback from here could stall this big mega bull rally. And that says the pattern to watch is in the weekly chart, the rising wedge formation that very often pulls back and makes a cup formation. Whether the cup formation can go and retest the old high of 17,151, the head in the Chapman wave stalk leg, and this is a brand new buy signal based on the B concluding, or whether this is just an A to B is going to equal C to D, I don't know yet. I suspect one thing, but the only way I'm going to get the proof is if in the weekly chart there starts to be a rollover and the 16,500 area, 16,470 area starts to get taken out on a weekly basis. And that says, H pattern, be careful because you could easily break 16,333 support because there's a rising channel, that dash channel line, and that channel line right now is shows the support at 16,420. That's major support. Okay. Now the monthly chart is still, it's a monthly chart. I have to wait until the end of the month, but so far it's holding the 9-period moving average. A close on the monthly basis under 16,360, not good at all. 16,372 is the 9-period moving average. But when I look at this chart, and this is what I showed my subscribers. Let me show you. This is the weekly chart. Look what's happened. A number of times. There have been a couple of sharp pullback weeks, and then it hits a bottom, in this case 14,719 back in the week of the 11th of October, and then there's a stupendous rally to the upside. It makes a top on the 3rd of January of this year at 16,588. Oh, that was the previous one, was 2013. 2014. At 16,588, peak D with a silent doji to boot, and it pulls back really sharply to 15,340. It's only 1,100, 1,200 points, but it was a pretty quick pullback, and then it forms a beautiful candle, and it starts a rally that goes to ABCD, another Chapman wave stalk leg formation, goes to there, pulls back, here's the peak, and this is what's going to be very interesting. Is there a match between this low and this low? In the daily chart, let me pull this, that was a weekly chart, now let me pull this daily chart. Is there a match between any of the lows that were made back at 15,340 on the 5th of February, or at the low of, what was that, 16,015, the week of the 11th of April, and then you got that beautiful breakout candle the following bar, and another beautiful candle the following bar the next day, and that's the day of the 15th of April. Are we matching that right now? If the Dow closes above the 9-period moving average, and now let me just, can I do that on this chart? Yes. Let me just show you the SPX. This is a different chart. In some ways, it's much weaker. In some ways, it's much stronger. It's funny about that, how these patterns have been forming. Look, the weekly chart didn't pull back even close to the 9-period moving average, to the up channel inside track support. In fact, it went to the upper band. So this is a very nice move from the 1991.39 all-time high back on the week of the 25th of July. This is really just 2 bars, and now we're moving up again. So I've got to watch this really closely, and I don't want to get too bearish. We were bearish before. Now I want to be just kind of on the sidelines for a moment longer. There will be a time to short, but meantime, there's a mixed market because look at this, QQQ. Hey, how about that? The QQQ Power Share Trust Series ETF monthly chart hasn't even made a lower low from last month. Almost all the other indices have. And you've got a beautiful doji possible reversal candle in the weekly chart of those, a long-legged doji. And that's going to be very important because my analysis of the long-legged doji says that somehow or other the 94.90 open and 94.90 close. That's unbelievable last week. Come on, let me check that out. Wow. You find that in all these years, an open and close with a doji candle, it opens at 66.53, closes at 66.70. Nope, it wasn't an exact. Opens, this is beautiful, at 66.78 and closes at 66.63. Even these tiny little dojis, they couldn't do that. So this is a very unusual occurrence. And at the same time, we got to just treat it as another chart that we got to analyze. But so far, the QQQ series is acting pretty darn well. Now, I had a question. Let me just see. I hope I'm not covering up the question. 1 second, right there. Oh, we got Ilka in Boston. Hi, Ilka. How are you?
Very well, Basil. How are you?
I'm good. You haven't been waiting too long. I was a little carried away. You were covered by another chart.
Not at all. Oh, I was covered by another chart.
Another chart, yep.
Oh, actually, you went over the cues, and that's the reason I was calling is because this weekend I kind of went over a few charts and here and there, and I know a lot of people are bearish right now, but what if the scenario is or could be possibility that we've hit some type of a low at this point, and Qs were the ones that actually, and E-minis actually, were showing some kind of strength that is maybe overlooked by others, and it's the weekly and the monthlies possibility that the weekly is actually a B.
A C. Oh, you want to go from there? Okay, you can do that. And the futures, are you doing it?
No, I'm doing it Qs.
Okay, so let's go to the Q. Yes, it's an E/B. And you're saying that maybe it was a peak B, and therefore the pullback shouldn't be too deep, and we should go to a C. That's basically what you're saying.
Yes, we haven't gone under the 9th. Everything looks strong. Monthly looks very strong. And, we've got some type of a retracement on the daily. But what if this is kind of we have been in such an unusual market, and, so I'm looking at it and I'm saying, what if we're looking at something that, may be overlooking? I'm just looking at a second scenario possibility because my E-minis actually retraced to a point where they could go higher, and they're doing it at this point, but a little bit more higher than what is happening right now. So that's why I called, because I said, are you looking at that type of a scenario at all?
I'm looking at it as a possibility for 2 reasons. One is that in this rotational market, since the summer of 2010, where I identified that there could in fact be a mild pullback because of the rotational correction, it's surprising, shocking, and wonderful that the market can rotate in such a way that it's just keeping the balls juggled up in the air, And as far as the market is concerned, as long as there's a modicum of strength that shows leadership, that's really what you want. And if the cues show leadership rather than a topping formation right now, for instance, Priceline is in leg B. We had a call on Priceline the other day, and I said, if it wasn't for the news, so far I've got it as an E/C in the daily, and the technicals are strong. I wouldn't be surprised if it actually went a little higher, but anything can happen. It's the reaction to the news that's very important. Well, it turns out that Priceline is up 38 at 13,19, up 3%, and the weekly chart is actually improving, trying to get to the 1378.96 all-time high, peak in the monthly and D in the daily, which would mean that it's a recycle. So if you've got that kind of strength, it does alleviate some of the pressure, the downside pressure. Amazon's not showing any strength right now. Google is exactly the same. It can turn and bounce, but it's really not showing strength or leadership. So you can't just have a price line by itself. Let's see what LinkedIn is doing. By itself, LinkedIn is looking fantastic.
LinkedIn is actually looking well, yeah.
Yeah, B, let's see, 205.72. So this is leg C in the daily, so it should still go to D. A, B, whoops, no. This is A, B, that's B. Yeah, so this is leg, let me do that again. This is leg D in the daily, but it's still looking very strong in leg C in the weekly. So when you get that kind of rotation, then that's the reason why I wanted to cover almost all our short positions and just stick with some kind of core positions right now. And the reason being, I needed to see two things. One is, and I showed the chart just a few minutes ago, I'd like to show it again. In the daily chart, let me just pull this one back, and I'll go to the Dow again, INDU. The candle that was formed right here, the candle that was formed Friday resembled very much the candle from the 21st of May. That's from the bottom at 20 on the 20th at 16,341. The next day was a beautiful candle, and it did squeak to a leg A. Well, it follows the next day is a doji candle, and then it continued until it made a peak A, a slight pullback, and it went all the way to higher to an up channel resistance line. And all I'm saying right now is the action resembled other turnarounds, but the big difference, and I made a big deal of it in my opening call, is that the MACD suggests that it's going to take a lot more points on the upside. That's why I mentioned earlier on 16,780 to 16,800 before I could see the MACD actually testing the fast-moving average, testing the slow movement.
Agree. And I agree. It has to be a stronger move now.
It's going to have to be. It's going to have to be a V-shaped recovery, and that's why today's close is going to be really important. And I might make a decision tomorrow that there's going to be more to the upside, and then we just have to wait because the 9-period moving average in the weekly chart is at 16,731, 120 points away. So this is a very important phase. Why? Because since 2009, since the March low, every single pullback, even that big April pullback that was a 22%, 20 to 22% back in, I can't remember, 2011 or something, even that met with huge buying, and we went on to new all-time highs. So actually there's another aspect I want. Do you have a moment to hold on?
I do. I can wait, yes.
Okay, we've got Ilko online. We're going to talk about the volatility index, and we're going to talk about the different indexes when we get back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better, a 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability, available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're back. We're back with Ilka in Boston, and we're looking at various scenarios here. And the IWM, which is the iShares Russell 2000 ETF, monthly chart, I can't really call it anything else right now but a potential peak F. Yeah, it could have recycled to B, but it's real close. I'm MACD and stochastic are all turning down, but the month isn't finished, so I have to say, for now, I'm calling it F. But it is absolutely a peak E in the weekly chart, and it's having a fabulous rally in the daily. But the weekly chart suggests trading range. The daily suggests that the 115.65 level, about almost $2 up from here, is going to be very strong resistance. It's going to probably make an H formation, unless by Wednesday you see the 116s being hit. I'm thinking that this is just a retracement of bounce in the IWM. But most importantly, Ilka, I'm sure you're looking at this. If you look at the VIX index, the volatility index is about to test the 200-period moving average of around about 13.65. It's trading at 13.73, having made a peak D in the Chapman wave in the daily. That's one of the reasons why we exited this position completely for fabulous gains. But I'm looking to get back in, and what I'd said is that based on a different index sentiment ETF, we will be looking at if it gets to a certain level. Well, all of a sudden, I'm looking at this and I'm saying, wait a minute, this is the daily, a very sharp pullback in the daily. How does that impact the weekly when the weekly has barely begun the weekly? Just 2.5 hours into the beginning of the week. And this says that the weekly chart is saying, no, be careful. There is enough there's enough buying pressure to maintain the upward movement a little bit longer, but on a weekly basis. These are the numbers. If the VIX closes anyway, it doesn't have to close at the high of 1757 that was made 2 weeks ago, 3 weeks now. But if it closes anywhere in the 16 area, 1620, somewhere around there, it's at 1372 right now, that's going to be a very big positive for the short side. That's a contradictory term there, but it'll show selling pressure. If in fact we get back down into the 1320 to the 12s, then it's all over for the selling for this phase. We got a good counter trend rally that can last even longer. Those are the parameters I'm looking at on a weekly basis. But shorter term, intra-week, we might get that turnaround. I'm watching the IBB, I'm watching the Qs, I'm watching the IWM, watching certain stocks. And as we're about to wrap up, because we're going to go to Larry Pesavento, look at GE. Beautiful move on GE. I was thinking, should we get it? Should we didn't? Well, it gapped up. It's in leg C. IBM, it was looking terrible before, but it anticipated the upturn. IBM's bouncing. Triple M.
Can you go IBB quickly?
IBB right now is trading at 253.47. This is the pattern that I think goes from an H to an M formation in the daily, but it's the weekly chart that has tremendous resistance in this is IBB, folks. It's the NASDAQ iShare Biotechnology ETF. If it can even get to the 258 area, I'm not sure it's going to, but if it gets to that, that's going to be tremendous selling pressure. We're going to have to watch it there. That's where there has been tremendous selling pressure. If the IBB this week, for whatever reason, breaks above 266.43, that is fantastic action. I would have to immediately put down all my bare tools and say, no, don't be silly. This thing's going higher because it's going to help the general market. So, yeah.
Thank you, Basil.
So thank you very much for calling in. Good questions. Not only that, let me just add you as we're going to wrap up. Thank you, Ilka. The dollar has not yet rallied over the previous high, but the DXU is in fact made a peak F. But it's holding very well. This is such an important period, not just for now, but for the rest of August. So this week, in fact, I would say by tomorrow afternoon, Wednesday afternoon, we'll have a lot more information. So stay tuned. I'll be back tomorrow. Stay tuned for Larry Perseverant, a great program here at TFNN, and have a wonderful day. And check out my opening call. You might find it very interesting.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.